Gold is sitting at a critical level right now, the same as the temperature here in Johannesburg. And today, guys, we have FOMC minutes. So that could decide the next major move in gold. Right now, the market is balancing rising yields, Fed fears, and geopolitical tensions. And traders need to be paying attention. Good morning, traders. Let's break down what's happening with gold today, what moved the market overnight, and the key levels I'm watching, and how I would potentially approaching trading gold heading into the FOMC minutes. So what has happened this week so far? Gold remains under heavy pressure after failing to reclaim that 4,600 area. On Monday, buyers were still trying to defend the support around 4,540 to 4,550, but yesterday, sellers regained control. We saw lower highs continuing forming, failed bullish rallies, and we continued downside pressure. The biggest reason for this move is the rising Treasury yields and the stronger US dollar. Now, the market is increasingly expecting the Federal Reserve to keep rates higher for longer because inflation remains sticky and oil prices keeps rising. And that bearish is extremely bearish for gold short term. Now, what is our news and fundamentals, guys? Now, geopolitical tensions around Iran and the global trade uncertainty are still supporting gold underneath the market. So basically, if you look at gold, it is trapped between two major forces right now. The bullish safe haven demand versus the bearish pressure from the rising yields and the Fed expectations. And today's FOMC minutes are extremely important because the market wants clarity and whether the Fed still sees inflation as a major risk. If the Fed sounds hawkish, gold could sell even further. Welcome 4,000. But if the minutes surprise dovish, then we could see that rebound and we could look at that 4,800 break that we are so eagerly waiting now. What are our key levels, guys? Let's talk about those levels. Resistance. The first resistance is sitting at 4,500. If gold stays below that level, sellers likely remain in control. The major bullish reclaim zone is about 4,600. If buyers can reclaim and hold above 4,600, that could shift momentum bullish again. Where is our support? Our current support is sitting around 4,450. If that breaks, I'll be watching for 4,400 very carefully, maybe even 4,000. And if yields spike aggressively after FOMC, 4,300 is becoming possible. So what would I like to trade? Well, this is my approach, guys. I'm going to look towards major key levels. If they do break, I will look towards it. Guys, the higher time frame trend is your friend. Stick to it. Happy trading.